Welcome to my weekly market roundup, 24th February 2021. I am Sagar Nandi, retired IT professional, swing trading stocks using the Q systems and techniques that I developed. You may contact me using my email ID tradingprofitably@gmail.com. I regularly share live stock and market analysis on my website, YouTube channel, and Twitter page. You are most welcome to make use of them. Disclaimer: this demonstration is for educational purposes only. I am not an investment advisor. It is not a trade recommendation. Trading involves risk. You and only you are solely responsible for the outcome of your trades. These are the Q systems that I use in my live trading based on these underlying platform and data, and I will use the same systems today as well. That was the last slide of the presentation. Let's start with a review of the global markets, starting with Australian Index AXJO. We are looking at it using the standard weekly, daily at a glance template running on Q Global on Metastock. In the weekly chart, AXJO displayed a bearish headwind 2 weeks ago. That time the backdrop color flipped from cyan to magenta. The shape was also bearish. Since then, price could not go up. For the third week in a row, the candle shape and candle color both are bearish in the weekly chart. In the daily, it is still in an uptrend. The weekly, daily, both colors are bearish now. There is a trend line support nearby in the daily chart. That is a time where we would not like to take either long or short trades. We cannot take long trades because weekly, daily both are looking bearish in color, and we will not short because there is a trend line support nearby. Over longer term period, it is still in an uptrend, but at the right edge, there is no long opportunity. What about the Japanese market topics index? Topics index displayed a bearish headwind 1 week ago. That time the candle color was neutral, shape was bearish. This week the color has changed to bearish as well. Shape is bearish. It has displayed a bear release signal. In the daily, from the top it has pulled back. Today's candle shape and color both are very bearish. Daily and weekly, both colors, both shapes are bearish. We are not going to take any long trades now. It is still in an uptrend. It has memory support nearby. Therefore, we are not going to take short trades as well. A situation similar to the Australian market. China market CSI 300 index. 1 week ago, it had an indecisive shaped candle. The backdrop color was bullish. From there, this week, the backdrop color has flipped to bearish. The candle shape is very bearish, and weekly has displayed a bearish headwind also this week. In the daily, it is right at the trend line support. We are not going to short it now. Neither are we going to buy it. Tomorrow, if price can go up from this trend line support, that may give a low risk buying opportunity in individual fundamentally strong stocks. UK market FTSE index. The weekly is inside a triangle pattern. The trend line support in the weekly is holding, though the backdrop color is still magenta. Trend line seems to be holding. In the daily, last time I suggested buying when price was at this point, and again in the last market roundup I mentioned that if price could go above this trend line support, that would give a buying opportunity. That seems to be happening today. For last several days, the daily traffic light candle color was bearish, red color, and today the traffic light candle color is yellow, neutral. It is holding the memory support in daily and weekly. This may be a time to look for low risk buying opportunity in fundamentally strong stocks. If you do that, you may keep in mind that there is a trend line resistance nearby. If you buy a stock today, you may watch if FTSE index is able to pierce through this trend line resistance, or is it pausing there. If it is pausing there, you may book quick profit in the swing long trade. I will not take a long position in FTSE itself. Looking at the trend line resistance in daily nearby, trend line resistance in weekly also is nearby, and the weekly color is still magenta. Therefore, I will not take a long trade in FTSE, but I may consider taking a long position in individual stocks. Lastly, India's Nifty 50 index. It used to be the strongest of the global markets, and that is continuing. The weekly is moving inside a rising channel. 1 week ago, it did display a bearish headwind. This week, it tried to go down. As of today, it is creating a bullish shape candle with a long lower tail. In the daily, it pulled back and went up again today with a bullish traffic light and bullish shape candle, also with a bull release signal. Using Q guidelines, that would be a signal to look for buying opportunities in individual fundamentally strong stocks. That is how Q traders like to buy when the market makes a swing low. They buy individual stocks when the index makes swing low, and they avoid buying when the index is at the upper boundary or when it is overbought for many days, shown by the stretch band indicator. Today would be the time to look for buy setups in individual stocks in the India market. Overall, all the global markets are in an uptrend. Interestingly, some of the Asian markets dropped today. Most Asian markets dropped today, but not India market. India market sharply went up. What about the USA market? For that, let's look at the market ETFs using Q Elite on TradeStation, starting with S&P 500 ETF SPY. Interestingly, as of yesterday's close, the weekly candle shape here is very similar to the weekly candle shape in the India market as of today. Today is Wednesday's market close in India, and this is as of Tuesday's market close in the USA. The weekly candle shapes are similar. Even the bearish headwinds that came in SPY 1 week ago, it was reflected in Nifty 50 in India 1 week ago as well. That is why I keep on mentioning that among the global markets, it seems India market follows the USA market more closely. In the daily, after falling for a number of days, yesterday price recovered. In fact, yesterday price closed higher, shown by the green color in the activity bar. It had very high volume, shown by the dot on the activity bar. That was a bullish signal. That is why yesterday I shared on Twitter that that might be the time to look for buy setups. Let's look at the Twitter post. Twitter.com Sagarnandi. I tweeted this one. Why was today a day to look for buying opportunities? Because two of the major ETFs, QQQ and IWM, bounced exactly from the memory support. Also, some of the mega cap stocks like AAPL reversed from memory support. Even some of the market ETFs like XHB, home building ETF, did the same. And I shared these posts. This is QQQ daily chart. It was dropping for a number of days right after displaying the bearish headwind. Yesterday it stopped right at the trend line support with a bullish shape candle. That was QQQ, a huge gap down open and then very nice recovery. IWM, a gap down open and attempt to go down further, nice recovery ending with a bullish shape candle. The trend line support worked very well. This trend line memory support and resistances work very well. Unless they are broken, we have to say the uptrend is continuing. If the trend line support was broken yesterday, that would be bearish. But the fact that the trend line support held, that fact is certainly bullish. If we look at mega cap stocks like AAPL, and AAPL was not the only one, Apple was not the only one. It was dropping continuously for several days. Yesterday, it came precisely to the trend line support and bounced up from there. And home building ETF XHP also came to the trend line support and recovered very nicely, ended with a bullish shape candle. I had a number of bearish short positions, some using vertical, some using stocks. When I saw that several instruments like these were reversing from trend line support, I booked profit in all of them. That was very useful because throughout the day market continued to recover. How were the other ETFs? Let's look at them. QQQ. Let's see how it looked like at the close of the day. Weekly shape is indecisive. Daily very nicely recovered from the trend line support. Dia, as I mentioned earlier, the weekly had memory support already. It was unlikely to be broken easily. The trend line supports are not broken easily. That happened, it is moving sideways in the daily. IWM we saw already, and at the close of the day, that picture is also showing very nice recovery from the trend line support. All the market ETFs are showing a bullish picture. If we look at the market internals, it is also bullish. I will not go through all the internals. Let's start with the mega cap top 20. Remember, I showed that Apple recovered very nicely from trendline support, but not that only Apple did that. The mega cap top 20 index itself precisely reversed from the trendline support both in daily and weekly. What do you see is a pattern that keeps on repeating itself. Therefore, whenever you see a strong fundamental stock or an ETF that is widely traded comes sharply down to a trendline support, you may be ready to take a bounce kind of long trade, and you may use intraday fine-tune chart to make a precise entry. If you keep that in mind, like I did, I exited the short positions and I took some long positions, you could have very low risk buying opportunities, and you would also be able to exit the short positions precisely. I will later on look at some of the stocks that I shared earlier and explain how I entered and managed them. If you look back, when Megacap Top 20 was near the upper boundary, I mentioned that I was not going to buy at that time. Why? Because in Q guideline, the optimal buy points are near swing low, which would have been yesterday, not at the upper boundary level. So yesterday was a good time to buy individual stocks. Maybe mega cap, maybe not, depending on the particular stock, whether that gave a Q long trade setup or not. Not sure if mega caps gave that kind of Q trade setup. However, individual stocks, many of them gave very low risk buying opportunity yesterday. Overall, the mega caps are certainly continuing to be in an uptrend, just like the market ETFs, and just like the market ETFs signaled a buy point yesterday, the mega cap top 20 index also signaled a buy point yesterday. If we look at the let's look at the Nasdaq market internals. In the daily, I am looking at the MA calculations. Percentage of stocks 50 MA above 200 MA continuing to be bullish. Stocks above 50 MA pull back for the second time. Even though the market recovered yesterday, the stocks above 50 MA, that aggregate calculation did not tilt up. The stocks above 200 MA has not breached the average line. So far, it has never breached. So Nasdaq overall is looking stronger. Advanced decline and up down volume are showing weakness. However, as you can see, it is also showing some strength if you look at the immediate past weeks. Immediate past weeks are showing higher peaks. If you look at a longer term period, then you have lower peaks. So it was weaker earlier and now it is starting to gain strength again. We'll have to see how the market plays out in next couple of days and weeks. Overall, Nasdaq is showing strength. What about NYSE? NYSE, the stocks were 50 MA above 200 MA is about to roll over. Stocks above 50 MA has already rolled over for second time. Stocks above 200 MA has also rolled over for the second time. That is showing that under the hood, stocks are starting to come down. Here, the advanced decline and up-down volume are more bullish. Therefore, when you look at NYSE and Nasdaq, in some ways, NYSE is stronger. In what way? In terms of advanced decline and up-down volume. In some ways, Nasdaq is stronger. In what way? The stocks above 50 MA, above 200 MA, that picture is stronger in Nasdaq. So that is giving a mixed picture. We cannot say conclusively which one is stronger. The internals are showing mixed signals. Here also, like in Nasdaq, you can see compared to many weeks before in the past, the advanced decline, upturn volume declined. However, relative to recent past 2 weeks, the advanced decline, upturn volume increased. We'll have to see how the market plays out. The fact that several market ETFs, mega cap stocks, and other ETFs also reverse from trendline support is in sync with what we are seeing, the immediate past increase in strength in terms of advanced decline, upturn volume. In the total view, There was no distribution count earlier, more than 2, and that is continuing. In fact, last couple of days, though the market pulled back a little bit, there was no distribution count at all. No accumulation count also. Unless we see a distribution count of 2 or more, which will come in red color, it is unlikely that the market will drop a lot. At least that has not happened in the past. This this market breadth total view is very useful because it combines the insight from the 2 composite indices, Nasdaq NYSE, and also the 4 major indices, S&P 1500, S&P 500, Nasdaq 100, and Dow Jones. By looking at it, you can anticipate if a sharp drop is coming, and we don't see that at the right edge. Now let's look at the sector industry breadth. We are looking at sector industry stock breadth using Q edge. Yesterday, initially market dropped, but it recovered, and that is reflected in the sector advance decline. 55% of the sectors ended positive. Overall, the sector, industry, and stock advance decline, they are showing a balanced picture yesterday, neither bullish nor bearish. 6 sectors went up, 5 went down. That is also showing a mixed picture. In terms of buckets, percentage of stocks above the mid bucket, that dropped slightly from 70% to 67%. Very small drop. The bucket bar chart is slightly tilted to the higher side, the bullish buckets. So that is also showing a bullish picture, and it is not at the extreme, bullish but not at the extreme. At the extreme, the percentage of stocks in the uppermost bucket greater than 10 would have been 25, 30, or even 40. So it is bullish but not at all overbought. Yesterday sector industry stock advance decline breadth is mixed. If we take a step back and look at a longer term picture, this very useful 1 month to 1 day sector industry stock advance decline breadth. Earlier it was showing a gradual weakening from 1 month to 1 day. However, yesterday's recovery has turned all the periods breadth to bullish or neutral. Of course, 1 month period is more bullish than 1 day period. 1 day period we saw is neutral. 2 day period bullish. 5 day period bullish. 10 day period is also bullish. 1 month has remained bullish for a very long time. That is also visible from the, let's look at the sectors across 5 days, 10 days, and 1 month. The 1 month period has remained bullish for a long time. Over 1 month, even now, 10 sectors are up, only 1 is down. Which one is down? That is actually healthcare, the blue bar. Healthcare is the sector that is down for all the 3 periods. For 5 days, 10 days, 1 month. Healthcare is not doing well. In fact, healthcare is the only sector that is down for all the 3 periods. Which sectors are up for all the 3 periods? Several of them. Energy is the leading one. Materials is also strong for all the 3 periods. So is industrials, financials, even real estate. Consumer discretionary, communication services. Therefore, 1, 2, 3, 4, 5, 6, 7. 7 of the 11 sectors are up across all these 3 periods, 5 days, 10 days, and 1 month. We have to say that is a bullish picture. Now, if we look at the technical breadth using Q Finder, let's look at the weekly picture. This shows the balance between bullish and bearish technical signals, the useful Q signals. Though the market was dropping for several days and yesterday recovered, it was not greatly bullish day, but it recovered, that made the candle shapes bullish. In terms of technical signals, if we look at all the weekly signals, it is slightly more bearish than bullish, 58% bearish, not overly bearish, 58% bearish. If we look at strength signals, 67% bearish. The reason is clear from the detailed bar chart because of large number of gap down open. If we look at trend continuation signals, it is balanced. Reversal signals slightly more bearish than bullish, but not overly bearish. That is the picture for the week, that is the current week. And if we look at yesterday's picture, it is also slightly more bearish than bullish, but not overly so. If we look at all signals, 58% bearish, strength signal 76% bearish. The reason is again clear, large number of gap down open. Trend continuation slightly more bearish than bullish. Reversal signals very bullish. That is why yesterday could be a day to look for long trades from some of these reversal signals. The technical breadth shown by Q Finder is showing slight bearishness, but not overly so. The fact that the market ETFs recovered nicely yesterday could be a sign to look for reversal long trades. Let's now look at some of the stocks that I shared earlier and see how I traded it and how you could trade it and manage it as well. I shared an idea on Snap on Monday, after Monday's close. Let's look at the forum post because the forum post will show how the charts looked like at that time. Now the weekly chart has changed. I always share live ideas on my forum under this category, Q360 degree trading techniques and ideas, where I aim to combine the strengths of the industries, fundamentals and technicals together to find a buying opportunity, and the opposite for finding shorting opportunities. I shared an analysis on Snap that was at Monday's close. I saw Snap's industry, interactive media and services, that was showing deceleration. These are snapshots from Q Edge, Vital and Global or Elite. The industry was stronger earlier, it was weakening, and the pace columns were showing deceleration. That led me to look for shorting opportunities. I found Snap. Okay, this is not Snap, sorry. This is pins in the same industry. Why did I? Okay, I might have mistakenly attached the snapshot of pins into. Never mind, let's say the chart. chart is Snap. The fundamental for Snap. Let's look at the fundamental for Snap. Sorry about that. While it is retrieving the fundamental scorecard using QVital, we may continue to look at the chart what I shared at that time. For Snap, it displayed a bearish headwind in the weekly. The backdrop color was yellow. Daily also displayed a bearish headwind. Daily color was yellow. Shape was bearish. In addition, it had a bear release signal and a reversal candle at pendulum high. That led me to take a short trade at the close with stop just above the day's high, narrow stop, and my initial profit target would be when the risk distance was covered. This is what I shared on Snap, and if we look at the fundamentals using QVital, it was overvalued stock. Earnings growth is high, but the overvaluation allowed me to consider shorting. I took a short trade in Snap before the open of yesterday on this day based on Monday's close, and yesterday initially it opened with a gap down, tried to go down and reversed sharply. I kept an eye on the stock. By the time it came to the low of the day, much more than risk distance was covered. Q guideline is to book profit once the risk distance is covered. So I did that. Though price closed sharply higher, that didn't affect my trade. Because I followed the Q guideline, I could exit the trade with profit. That was Snap, and I shared another idea on a peer stock of Snap. That was Pinterest. Pins. It's in the same industry. The industry was showing deceleration. Yes, this time I attached the correct snapshot. In terms of fundamentals, it was very similar. Pinterest also had overvaluation, had great earnings growth. It's a high growth stock. But looking at the overvalued nature and the industry's deceleration, I looked for a short setup. And this is how the chart looked like when I shared it. Weekly displayed a bearish headwind after an indecisive shape candle at the very top. The backdrop color was bearish. It also displayed a bear release signal in weekly. In weekly, this sharp up move was associated with earnings that created this gap up open here or here one of these days. Then it created a watermark resistance and a false upside breakout at the watermark resistance. When I shared it, the daily had bearish flow color and bearish shape at pendulum high. So I thought of shorting this as well, and I decided that if price went above this gap down, that is this candles, gap down candles high, then I would close the trade. I would take loss, and if it came down, I would book profit. This was my thought when I shared Pinterest. Let's look at the stock today, how I managed it. It was similar to Snap. I shorted it based on this day's candle. That is when I shared it. Next day, it sharply opened lower. This was my entry point. This was my stop loss. At the low of the day, I had covered my risk distance. So Q guideline is to book profit at that time. And also, I keep an eye on the market breadth. Internal studies. the 4 major indices and the 2 composite indices, there I could see the reversal happening in all the major indices. And I also saw that several of the reversals were from trendline support for QQQ, for IWM, for Apple, for XHB, for many other stocks, major stocks and ETFs. Looking at that, I booked profit, not a large profit, but booked profit in both pins and snap. No, I couldn't close it right at the bottom, but I could close it before the trade came into a loss. I took a small profit in pins and snap. That is how, if you follow the guideline, the probability of coming out with a profit, small profit maybe, sometimes larger profit, the probability is higher because we are using not only technical but technical, fundamental, industry, all strengths together to decide whether to buy or to short. These were 2 short ideas that I shared on Monday. What about the long ideas that I shared earlier? SXC was one of them, Suncoke Energy. I shared it in the forum. Let's see, when did I share it? I first shared it in the market roundup of 14th February as a breakout trade. 14th February SXC. The weekly was bullish color, bullish shape. Daily was very nicely breaking out of the trend line resistance, and I noted that was happening after a sideways move associated with earnings. When after earnings it moves sideways for a few days and then breaks out, that is a low risk buy point. That was based on 14th February's chart. Let's look at SXC now. Where is 14th February? Here. So the buying idea was based on this candle, probably Friday's candle. The buy would be at the close of that day, stop would be below this trend line support, and by yesterday price sharply went up. You see something here, that though the market was dropping for a few days, SXC overall didn't drop. It continued to go up with higher high, higher low, and gave a very nice profit. That is what I have seen when you align fundamental, technical, industry all together. Not just technical, not just in technical and industry, but even fundamental together, the chance of you getting stopped out, even if the market is pulling back a bit, is lower. And SXC shows that once again. Another disciplined trade, easy trade if we followed the Q guidelines. Let's now look at few other stocks that I discussed, and I was looking for a buy setup. One was QDEL. QDEL has strong fundamentals. Earnings result was also good, but it dropped sharply. And I mentioned that if QDEL stabilizes and goes up from here, then I would like to take a long position. At that time it was near the weekly memory trendline support, and at that time daily also had a trendline support. The daily trendline support, the historical support line, we can see from a different chart template on QLit. Let's look at that. The daily had a trendline support here. So though after earnings it gapped down and closed lower sharply, I mentioned in the previous webinar that if price recovered from here, that would give a bounce long trade setup, but it didn't. Bounce long trade setup, like the other trade setups, it has very clear and unambiguous checklist. That is one thing that is, I think, somewhat unique to Q methodology. For example, IBD is a very robust technique, but if you join an IBD group, you will see 5 people are trading the same stock in 5 different ways, maybe 4 different ways. There is no unambiguous, at least not to me, way. If it was so unambiguous, all the 5 people would be thinking of the same stock in the same way. That is not so. Even in terms of whether the market is bullish or in correction, there seems to be no common conclusion. Market Smith may say something, individual traders may say something else, and expert IBD traders may say something else totally different. So it is very robust in my view, IBD. Certainly lot of followers there, but it takes a lot of time to master that technique. It is not unambiguous. Whereas Q techniques, whether in terms of fundamental industry analysis as well as technical analysis, is unambiguous. The trade setups are unambiguous. Checklists are unambiguous. The indicators are unambiguous. So bounce setup had unambiguous checklist, and that condition was not met. That condition would be to reverse from the trendline support and close higher. High volume was already there, but it didn't close higher above the trendline support. So I wouldn't, or no Q trader would try to apply the bounce setup. So I observed the stock, but it didn't give the trade setup, and I stayed away. A similar stock was AXL. Here also the weekly had trendline support, daily had trendline support. Here also after earnings it dropped. This white dot and the dollar signal is showing that earnings was there. After earnings it dropped. However, in terms of Q fundamental scorecard, it was strong. And similar to QDEL, I was looking for a bounce long setup in AXL. Now, unlike QDEL, AXL did not go below the trendline support. Instead, yesterday, along with the market, AXL recovered right from the trendline support, both in daily and weekly. High volume was already there earlier when the price dropped. Therefore, if you applied the Q checklist, technically you almost had a bounce long trade setup barring the upper tail. If the upper tail was not there, I would undoubtedly take a long position at close yesterday. Looking at the upper tail, Q guideline is to wait for today and use the Q fine tune real time 5-minute chart to take a precise entry in AXL. Two stocks, QDEL and AXL, for both of which I was looking for a bounce setup. QDEL did not give it, but AXL gave it. Let's review AXL's fundamentals. If we look at the industry, yesterday the industry was not the strongest. However, the pace column is showing acceleration over 5-day period and to some extent over 2-day period. That allows us to buy. We may buy based on either strength or acceleration. It is not the strongest industry now, but it has some acceleration over 5 and 2 days that allows one to buy. And if we look at the fundamental, it was a star candidate. As good a valuation as it can be. Just the cyan color is enough, but it has the score of 100 for both valuation and secondary valuation. Very high earnings growth, 292% in the latest quarter. In the prior quarter, 98%. Before that, minus 425%. Therefore, it is rapidly going up and is very high acceleration, very high earnings growth now. Excellent valuation, as good as it can be with a short squeeze potential. Fundamentals of this stock are very, very strong. And that is why I was keeping an eye on the stock. I like to buy only fundamentally strong stocks in strong industries, and looking at the chart, it seems it is more likely it will go up than it will breach the trend line supports. Of course, if the market falls sharply, the stock may also go below the trend line support. However, as I have seen time and time again, like you have seen also probably, when you are combining such strong fundamentals with industry strength, acceleration in this case, and this trend line supports, it is not easy to get stopped out. It can happen, but that is fine if we get stopped out sometimes. To me, it is giving a nice buying opportunity right now if it goes above yesterday's high today. Let's now look at some more stocks that I shared yesterday. Yesterday, when the market was recovering, I tweeted the radar snapshot, Q Elite's radar or sonar snapshot of a number of stocks. Let's look at them. Yesterday, during market hours, around 2 p.m. New York time, I shared this picture from Q sonar or radar of PBI, CYH, TAP, HIW, AXL. Let's look at them using sonar as of today. When I shared it, let's look at that also. When I shared it, why did I share it? Several of those stocks had a gap down open. From open, all of them went up sharply, some by very large percentages like 8.4, 5.4, then others by 2.1, 2.9, 0.7%. As of that time, from close to close basis, all these stocks were up and they had a false move. False move here indicates an attempt to go down but reverse and start to go up. That's a bullish false move. AXL had a trend line touch at that time, and this stock had a go with flow long signal tap. In one way or other, all these stocks were potential buys provided the signals confirmed at the end of the day. AXL I already showed you. It was in a very good position at yesterday's close. Let's look at the other stocks. Let's look at CYH. We start with that because that did not confirm the setup. In CYH, what I was looking for, was a break above this trend line resistance. That would give me a breakout long trade setup. 1 week ago, the candle had a long lower tail. If yesterday could break out of the daily trend line resistance, this week's candle would also be more bearish with longer lower tail in the weekly. And why was I interested in buying CYH? Not only because of this breakout possibility, in fact, it would have given a pullback setup. It sharply went up, pulled back to the yellow direction line. White direction line is already below price. Therefore, if price could break out of the trend line resistance, it would give me a pullback setup and also a breakout setup. What about its fundamentals? Once you go through these 3 steps, fundamental analysis, technical industry analysis, you would know why I am looking at these stocks. Healthcare facilities industry, let's check that out. Very straightforward, easy to follow, unambiguous steps. Industry was not the strongest yesterday, healthcare facilities, however, pace was showing clear acceleration over 1 day and 5 day period that allowed me to buy. In fact, these are the industries that are turnaround candidates that were lagging behind and now accelerating. These are turnaround candidates. When you combine turnaround candidates in terms of industry with strong fundamental, with buy setup on technicals, you end up with very high probability, not just high, very high probability trades. So the industry allowed me to buy, and see here again a star candidate. Excellent valuation, very high earnings growth, and sustaining that high earnings growth for 3 quarters in a row. Great earnings quality, short squeeze potential. Star candidate with few other reasons as well to buy. That is why I was looking for a buy setup. However, it did not confirm yesterday. But if it breaks out today, in fact, in the overnight market, I see it is up by 3.15%. Overnight prices may change after market open, but last traded is 8.85. Let's see where is the trend line resistance today. 8.8. So it is just above the trend line resistance. If it can open here, that may as well be a gap up open. Gap up open above trend line resistance. From there, if price continues to go up, I would not mind taking a long position in CYH. Great fundamentals. AXL, CYH, these two stocks I covered. Let's look at Pitney Bowes. This has an interesting pattern as well. And before looking at the chart, or while doing that, let me also try to get the fundamentals. Pitney Bowes, office services and supplies. Stocks in this industry are expected to be negatively affected by the COVID, and as people are starting to go out to offices, there is a logical reason that this stock will do better. It has great valuation, not high earnings growth, but great valuation, robust earnings quality, short squeeze potential. And if we look at the industry, great industry in terms of strength in recent days as well as acceleration. So the industry fundamental both allows me to buy, and see the chart. Sharp up move, they usually lead to a pullback. That happened yesterday. We had a bullish shape candle in weekly. The backdrop color is magenta. That is expected. Whenever a pullback is as sharp as this one, we expect the backdrop to be bearish color, magenta, as in this case. So it is not giving me a go through long setup. That is not expected when the pullback is so sharp, but it is giving, almost giving a pullback long setup, because price stopped right at the yellow direction line, recovered from there. White direction line is already below price. Just like AXL, only reason not to buy it at close yesterday would be this upper tail. If today price can go above the high of previous day high using fine tune chart, you might consider buying it. That would be a pullback setup. Now if I go to Cube Vital and look up the Finder picture, Finder snapshot. Okay, PBI is not here. Why PBI is not in Finder? I ran Finder today after market close, yesterday, only on stocks with high liquidity. So PBI may not have that high liquidity. That's why in this list it is not there. That's fine. It is giving a possible pullback long setup, good fundamental, strong industry, and an industry that may be positively influenced by the COVID vaccine. Let's look at, we have 5 more minutes. Let's look at 2 more stocks. These are also from the radar. One was HIW. Let's look at its fundamentals. We carry out the same step again and again. Straightforward, simple, unambiguous. Office rates. Another industry like Whitney Bowes industry, which is expected to benefit from COVID vaccine. Let's look at the industry. Fantastic, isn't it? Just one look at it, and that is I think a very large distinction of Q methodology with other methodologies. Everything is visual and unambiguous. Some acceleration, but more than that, it is very strong. Relative strength of the industry, very strong, and you see how weak it was before. So again, we are catching a turnaround in the industry. Fundamentals, star candidate again. You would start to love them if you follow them. Great valuation, great earnings growth. Could not be any better. Yesterday, 80% of the stocks in the industry were up. How was the stock chart? This is a pattern that I have mentioned earlier. When a stock is moving inside a range, we wait for a breakout with pressure. That happened on this day. Breakout with pressure. In addition, we had bullish flow. That is expected when the breakout happens from watermark resistance or breakout from a long sideways move, base pattern. Price went up sharply, created a base over several months, then on Monday broke out with pressure. Usually those stocks tend to move much higher. That was Monday, the breakout happened, and see what happened Tuesday. It opened with a gap up, and though the market opened with a huge gap down, it opened with a gap up. Market started to go down further in the beginning, but this stock continued to go up. In the weekly also, it broke above the watermark resistance, has memory support, bullish backdrop, bullish color. Long open space ahead of it. How is its fundamentals? I think it had a dividend also. Yes, it had also a dividend, has a dividend yield of 4.5%. So be it in terms of valuation or earnings growth or dividend yield, the industry strength or the technical strength, in this case breakout with pressure from a sideways range. In every respect, this was giving a buying opportunity. By the way, if we looked at QH, look at the sector. It's not required. See the strength of the sector as a whole. The market recovered, but which sector closed as the strongest yesterday? Not the non-defensive sectors. Real estate was the second best performer. Which one was the best performer, by the way? Utilities. So yesterday's two strongest sectors, in spite of the market recovery, were utilities and real estate. And I picked a stock in real estate that is a star candidate. What are the other stocks I picked so far? AXL, PBI. Whitney Bowes and AXL both are expected to benefit from COVID vaccination. What other stock idea I suggested? Okay, let's look at two more. I know we are at 1 hour point, but let's look at two more. It is worth it. I think so. I'll go through two more stocks that I shared. FSP. Again, the same pattern that I mentioned just now. A long sideways base that was also a triangle pattern created by trendline support resistance, both in daily and weekly. Yesterday it broke out of the weekly triangle, broke out of the daily sideways move, daily triangle, with bullish pressure in both daily and weekly. There is open space ahead. This is again a breakout from congestion kind of setup. Long base and breaking out. FSP And how is its fundamentals? It will be very, very strong. Otherwise, I wouldn't share it. At least very strong. At least strong. Okay, let me not use superlatives. We need strong industry, strong fundamental, strong technical. This is office rates. This industry we saw just now. Office rates. Okay, this is commercial rate. Okay, let's look at office rates industry. The stock that I discussed just a while ago. Okay, office rates, commercial rates. Yes, same industry. Very strong industry. We saw that. And if we look at FSP's fundamentals, see the dividend yield 7.2%. Yesterday when I shared it, I think I shared it in the forum. I think it had even higher, about 8% dividend yield at that time. Let's look at that. It is important, I think, valuable to look at the post when I shared it and see how the trade plays out after that. This is what I shared yesterday on FSP, and when I shared it at that time, the dividend yield percentage was 8%. And of course, the stock is fundamentally strong. Okay, I don't need to retrieve the data. I have the snapshot. Okay, I have the data retrieved. Again, a star candidate. Great valuation, great secondary valuation, fantastic earnings growth in the latest quarter, a beneficiary of COVID vaccination, short squeeze potential, see the strength in the industry. Again, real estate sector was the second strongest yesterday, followed by utilities. Very nice, steady up move in the stock. In every way, this was a buy candidate. And the last one, I kept the good one because of its industry, probably to somebody. TAP. In the weekly, it was going up sharply, very nicely. After displaying a bearish headwind, it dropped. It had earnings around this time. Sharp pullback. A bullish shape candle after a doji candle after a pullback. Backdrop color is magenta, that is expected following such a sharp pullback. The pullback took it to the white direction line where it moved sideways in a narrow range for a number of days after a earnings drop. And yesterday it recovered nicely, went above the yellow direction line. So it is giving a pullback setup again. In addition, we have the benefit of a trend line support. Pullback after narrow sideways range that came after earnings drop, and now it regained the yellow direction line with bullish pressure. That's a nice pullback setup. How is TAP's fundamentals? And while I am retrieving the fundamental, you may note that the stocks I am sharing, they are less likely to be affected by market volatility that we saw in recent days in growth stocks. All these stocks that I shared, they're expected to benefit from COVID vaccination. Great valuation, steadily going up. Let's look at its industry, TAP's industry, brewers. Fantastic, isn't it? Just 1 second and you know. One of the strongest industries yesterday, one of the most accelerating industries yesterday again, an instantly identified turnaround candidate in terms of industries. And in sync with that, it's also a pullback candidate on technical charts with great fundamentals. That is how easy it is to identify 360-degree trades where fundamentals, technicals, industries all are aligned. Just takes a few clicks and absolutely unambiguous system. I think I would venture to say more unambiguous than any system I have seen at least. These are the ideas I shared yesterday. I might have taken long position in several of them. I may add to my position some of the others today if the market and these stocks continue to go up. As I said, most of them, if not all of them, are expected to benefit from vaccination as well. As you can see, in Q technique, we are always looking for a pullback. At least I am doing that. I know different traders may use Q systems combining with other systems, but Q guideline is to wait for a pullback that seemed to have come yesterday. Prior to that, I was not sharing many ideas. And right when it bounced up from trendline support for several market ETFs, I was ready to look for low risk buy points in individual fundamentally strong stocks, and I shared several of them. Let's end today's session here. Thanks a lot for attending. I look forward to seeing you in our next session. That will be sometime during the weekend. I will announce the date and time, Saturday or Sunday, on Twitter page, and you will also get notified if you are subscribing to the YouTube channel. Thanks once again. Have a great week and trade profitably.